Hey, it's Mike with PriceActionTradingSystem.com, and it is Wednesday. It's May 11th. This will be our chart listen for the day, and want to start out showing you this daily chart. And we got another fake out today. Prices had opened, traded way up here, only to fail and trade lower. And my guess is we're still headed to this measured move here. And again, we could be headed all the way down to this next measured move down. I forget where that was now, down around 30, 3684 or so, somewhere in that range. 3680 is what I'll call that for now, just so. Yeah, my guess is we're going to test this low where the dashed blue line is, and maybe we'll find some support and bounce out of here. We're still severely oversold, so this market needs to rally, needs to at least have a bounce. So I would expect we'll get a bounce from here. We'll just have to see. But I suspected this morning that we would probably get another fake out and head lower, especially when prices couldn't. I'll show you when we get to the intraday chart, but when prices couldn't breach the overhead resistance and turn down, that was a good sign that we were probably headed to make another low for the day. So anyway, let's flip over to the other chart and we'll go through the trades and wrap this day up. Okay, here's our 2000 tick intraday chart, and you can see it really looks kind of like another range day, although we closed pretty close to the low of the day. So in the end, this is kind of a reversal. I mean, we traded down. This was a news item at 7:30 this morning, and look at that move. Evidently, they didn't like the CPI, the core CPI numbers. For whatever reason, I guess they didn't come in where they expected them to, or they didn't like them, whatever. But this thing sold off, and then they took it back like almost always. Anytime you get a big news sell off, usually they take it all back, and the market kind of resets, and then we started trending lower again. And that's pretty typical. We see that all the time. These news items don't stick. They just affect the market emotionally, and then everybody realizes, hey, that was just an emotional move, and suddenly, they reverse it and they start taking it back, and you get pretty much right back to exactly where we started, and we had lower again. So I didn't measure the legs here, but I'm guessing they're pretty much a measured move, which this is where you would expect prices to come back. I mean, we went a little lower than that, but that's pretty much two measured legs. And so that's what we're looking at, is just kind of this sell-off due to the news, and then they took it back, and then we kind of reset. The market just kind of resets, and now we got some legitimate selling probably working lower here. And I still think the target's that measured move based on the width of the range. My guess is we'll get a bounce there. I mean, until I see that, don't bank on it, but that's my guess. We'll get a bounce there, and then at a minimum, and we may even reverse there and trade up. I mean, at some point we're going to put it. I mean, every time I've seen these sell-offs, just when you think they can't get any worse, these things find the bottom, they find support, and the market takes off, and it doesn't look back again for a long time. So will that happen this time? Yes. When will it happen? That's the part I don't know. I can't tell you when that happens, but I'm almost certain that will happen again at some point. Is that in the next few days, next week, or next year, or in 2 years from now? I don't know. We could trend down for 2 years. Who knows? I really don't see that happening, but it's possible. So the price action, we just have to follow the price action and see what it gives us and go with that. I mean, always never argue with the market. Just wait for what you see and then trade it. But let's zoom in and go through these trades. And I marked this trade, but I don't know if you want to take this trade. I mean, really, we got a double top. We get a little failed break higher. Plus, you got this trend working up. You get the break, two legs to a new high, and then you make this lower high here. And there's strong resistance right there. And you can see we tested that. We actually broke higher and turned down. I mean, even if this wasn't a huge bar, I'd probably make this green because it's just a first entry short. And it's, you might argue we've tested that multiple times, but we did go higher there. It's really just a lower high, trade off a lower high. And so you may take that trade. It's a little aggressive no matter how you look at it. But when you got a bar with 70 ticks in it, it's quite aggressive, and so you got to be real careful with that. I marked it, but I don't know that I'd take that trade. I probably wouldn't take a trade right into that, so I'd be real careful when you see these high volatilities. There's some of them that are high volatility that don't amount to much, and usually this one's not, crazy like this. I mean, really, we dropped in just 2 bars. How far did we move in 2 bars? I mean, we moved 53 points in 2 bars. That doesn't happen often. I can remember if the market moved 53 points, and I'm not talking about ancient times. I'm talking about not long ago. The market, but he's lucky to move 53 points in a day, much less than 2 bars. I mean, this is just crazy. And I will say this, I heard one of the Goldman Sachs, one of their high-level analyst made a comment, and he said that his opinion is that this is the new normal. This is not going away. The crazy volatility and all the craziness in the markets he called it the new normal, and said, and they don't expect this to go away. And are those guys 100%? No, but they know what they're talking about. They're analysts and they're paid to know, and they research all this stuff, and so. When they say something, might be might be worth listening. Now, don't go trading off the news or anything like that. Most of you, if you've been around long enough and you follow me, you know my feelings on the news. For years and years, I'd get up at 5:30 or 6 in the morning and watch the markets while I worked out, waiting on them until 7 o'clock I was going to trade and thinking I'm gaining an edge. And now that I really know what trading is, once I really learned trading and learned price action, how the charts work, and how you can predict where prices are going to be, in the future pretty consistently. And now I know the news. They write the news to fit it because they don't, there's no way to know this news item is coming. And then suddenly you get this news item and the market rallies and goes right to some crazy point that you would have thought prices could never get to. Well, that's not a coincidence. They didn't know what the news was going to be 2 weeks before or a month before or however further out we were looking. And so I know for a fact they write the news to fit the price action. So don't believe anything you hear on TV. Don't listen to it. It's all hogwash. So anyway. We dropped on down here, and then we get a nice little, this is a double bottom, so really there's 2 legs. This is just sideways stuff. So there's 2 legs up there and a second entry short right off the EMA. Perfect setup. Take that trade. That's what you're waiting on. And you actually get a repeat of that. You get another little sideways double bottom, and you get a first entry, second entry, and another nice signal bar. And then you get a lower high here off of this one as well, and a nice move down, and you probably get a runner on, you wouldn't have got a runner on this entry, but if you take this lower high, you definitely get a runner on it. And so I like both of those trades. And then now you've had a break of the yellow channel and a new low, and then suddenly we're trending in the other direction. Unfortunately, I don't see anything here that you can take on the way up. This is 2 sideways. Again, this is 2 sideways. I do like this short here because you get a break and you move up and you get a triple test there. 1, 2, 3, nice signal bar. Just go short right there. I mean, there's plenty of room back to the EMA, back to the lows. So I like that one for that reason. No, we don't have a break at a new high yet, but with that triple test there and this sideways range, you'll get a scalp out of that most likely. And actually, there's only 12 ticks in that bar versus 127 in that one, and 70 in this one. So much more manageable stop loss there. And of course we do run down the EMA, bounce, make the new high, and then we're going lower again. But there's no setup here really to go low, to go short until we bounce right here. And I draw that trend line right there. And now this yellow one's played out to the downside, and we're looking at what looks like a reversal here. Notice you get a first entry, second entry. And again, this is a little bit sideways here. This is a little higher high than some of the other ones, but I'd still call this a new low, and this a second entry. So I'm not crazy about entering that second entry, but it's a possibility because it looks like it confirms this trend line here. Okay, I had a slight interruption there. I think we were talking about this trade. I treated this like a failure, coming off a possible trend line right there. This had played out, and then this, if you draw that trend line there, it looks valid. And so you'd expect, at least with that reversal there, you can really see two legs up there. So, but you could also argue that, hey, this is sideways and maybe that's a second entry short. But with this being so far above the EMA, I was not crazy taking a short there, especially since I was thinking long at this point and really liked it to go long. And sometimes it's hard to switch gears like that and say, hey, well, we're probably going lower. But it actually comes back and gives you another second entry long here, and you might even call that a triple test. I didn't like the signal bar. It's one of those really with no body. It's mostly bullish, but it's just kind of almost a neutral type bar, so I didn't like that one. Again, you do have a new swing low, so you could argue there's a failed second entry short right there. But again, that looks a little congested. It's not quite back to the EMA, so it's just not a really good setup. And so even though it works, you're better off to skip it. And it looks like you're going to have a higher low here, but this ends up closing bearish, so you can't really use that bar either. Then you get another second entry here, but the signal bar is no good. And so you just can't really participate in that move up, and it's a shame because it's a nice move. But if you risk those kind of trades, hey, they work this time, and that's what happens to people. They'll beat themselves up and say, I thought about that trade, and I knew it. I should have taken it. And the next time you take it, and guess what happens? It doesn't work, and you get burned, and you have a loser. So if you follow the rules and the price action goes without you, you still did the right thing. And that people struggle with that, but I can tell you that's very important. So anyway, prices run up. You get the break, you move to a new high, and you can see that channel coming into play here off those highs right there. And we turn down. You do get a reversal here, but it sets up on the wrong side of the EMA. And again, it's not really a trade you can take. And then we're just chopping sideways here. You might consider this trade. You've tested it high many times, and you get this failed breakout, but it's right into the EMA. That's the biggest problem. It's just a first entry, so that's another problem. You could look at it as a failed breakout. You would expect prices to try to come down here, but you've already had a break of this yellow, and you've just been going sideways, so you don't have a new low yet. So that's a reason to say, hey, we may be going lower. I didn't mark that one, but it's one that, you could argue for. Generally, you want to wait on the lower high, and you just don't get one. I mean, you get a lower high, but this is not a lower high setup you want to trade. So when I say that, sometimes that confuses people. When I say you don't get a lower high, well, sure, you get a lower high. But when I say that, I mean you don't get a lower high that you could trade. So make sure you don't get confused on that, because obviously that's a lower high than this high. So it's a lower high, but it's not a lower high that sets up you can trade. When I say it's not a lower high, or you don't get a lower high, I mean you don't get a setup that you could trade as a lower high, or a higher low, or whatever. So and then we come down here and we make a double bottom, and then you get a triple test right here. And that I like that trade. It's really two legs down. It's a double bottom. It's a little bit of a higher low, way away from the EMA. I like going long there. And then you also get, this double bottom, you get a first entry, second entry, and a first entry, second entry long. Again, it's not a perfect signal bar, so I'm just not absolutely crazy about it, but there's enough reasons to consider that trade if you want to be a little aggressive. And it does, it takes on off. And we run on up here, and you get this is really a repeat pattern of this. It looks almost exactly the same. You know, you get that little failed second entry in there, and but it's still above the EMA, and you're just working sideways, so don't take that trade. And it works on down here, and we're going higher. And again, I just don't see anything you can trade in there, and then you're just chopping sideways here, and you get that failed break higher, and really that takes you up there to about where we'd been turning down the previous resistance, and you get this big bearish bar, and you're way away from the EMA. You may take that on a failed breakout, but as always, you're almost always better off to wait on a lower high setup. And here you don't get one. So the bottom just falls out of it. So of course you don't know what's going to happen ahead of time, so you're probably safer to wait on that lower high. But you did have a break here and two legs up to a new high. This is strong resistance. It does kind of look like a range. So there's reasons to consider that trade. It's a little aggressive though, so just remember that. And you know, you can see it's the aggressive trades that always tend to give you the big moves, and then you get a little second entry short here. I marked this one green because the signal bar is iffy. It's real close to not qualifying. I mean, you could argue, did that close in this lower 1/3 or not? There's a lot of stem there. But it's still a second entry short, and you're still expecting prices to go lower after a really strong move down. So you may take that. Then they're just kind of chopping lower, and then you come back and you get a first entry, second entry. And you could argue that's a triple test. So you get a second entry short, a triple test, and a pretty good signal bar on that one. And look, now you get a really nice move down. You just stick to the basics and look for the second entries at the key entry points. You're going to do so much better in this as a trader. So I have that conversation so many times that I feel like I just am a broken record, but people don't hear it or don't listen to it or whatever. You know, they keep trying to take these trades, and they'll send them to me and want to know why they failed, and they're not even a setup there. And if they just stick to the basics of second entries at the key entry points. So anyway, we run down near the lows, we bounce, too choppy here, nothing there. And then we come up here, and you try to go short once, you try to go short twice, and you got to go short 3 times. It bounces and reverses right off the EMA. That's a triple test with a nice signal bar, with plenty of room to get out, and look at it go. That's what the smart traders are waiting on, those good setups. And you can always tell because prices rocket off. That was a nice move right there. And believe it or not, that's goes right up to the highs again, and that's 16.5 points before you even get your first correction. That's the kind of trade you want to try to catch. But anyway, there's your failed second entry long above the EMA again. We've seen it several times and it's been working, but I still don't recommend taking it. And of course, we're just dropping down, and here you get another, pretty much a triple test, and you've really, in one bar, you've gone all the way down and through the support, but this is a downtrend, so you would expect it to go out this way. So maybe you take that trade. I don't know. That bar is just really big. I mean, it's 34 ticks. I marked it, but I'm not crazy about it. Then you get a first entry, second entry, and I marked this one. And the only reason I marked this one is because at this point, this was the key entry point. And you can see that. You got a little channel here, and we've been turning down off this line the whole way. It's moved on me a little bit. And the reason is because of the way I set this up. I've gotten it off now. But really, the way I found this, and this is a little trick I'll show you. I originally drew this trend line just like so. And there it is. You can see it. And we went higher here. And then turned back down again. But if you take that channel and show your measured moves, Look where it draws that line right there for you at those highs, right where you turn down. And you can see it continued to come into play. So really your channel was over here. And so really this was a two-tiered channel, and this was a midline. You won't see that happen very often like that. Generally, it's going to go you might see it break out and trade different, but in other words, you may see it overshoot here and then overshoot that distance here. But every now and then you'll see a correction like this, and this turns out to really be the trend line over here. So anyway, just something to keep your eye on. Use those measured moves. And again, if you just bring it back to here, I'm going to get my chart all off here, but you'll see my point here. This is what we were looking at originally. And I just do them, show them, or you just extend it right. I thought that did it, but let's just go with show measured move. And it gives you the measured move perfectly right off that trend line. And so that's an important little trick that you can use there. So I'll just leave it on there like that. And of course we turn right down there, and there is a second entry there, but it doesn't set up very good. And we're just chopping along, no setups here either really, and just not a good chance to enter any of that. And then finally you get a close outside here, and you start to move lower, but then you come back and you get a triple test. 1, 2, 3, and there's also, you could, by the count, there's a second entry, and by the count there's a failed second entry long too. So I like that one just as a triple test, really, if nothing else. But if you don't like it, a few minutes later you get a second entry short with a nice signal bar, and that one takes off, makes a pretty nice move. Where's my mouse? Come back here. And we drop on down, 2 legs down, and then we bounce down here, and that was a little lower than the original low. It looks like this is the actual lows across here, but we do bounce here, and you try to go higher once. Let me make this a little bigger. It's hard to see. Twice. Notice the new high, first entry, second entry, it fails. I like going short right there. Just try to get a scalp back to the lows again, and maybe it goes lower. It does go a little bit lower and then turns up. And I don't see any reversals in here. There is a second entry long right here, but this trend line, that just kind of sets the trend line. Doesn't really confirm it. This is below the EMA. I think it's a little too risky. And you can see it takes prices a little bit before they take off. Now there is a higher low right here, and that does confirm the trend line. I didn't mark that one, but that's one you could argue to be green. Possibility. And then you come back here, and you get a first entry, and it turns down again, and you get a second entry long right there. I like that one. It's right at the key entry point. And you can see it takes off right there. And it actually gives a big overshoot, and then comes back and gives you a first entry, second entry. But after that big overshoot, I'm a little leery of entering on this one because it's not a very good signal bar either. So wait and see if you get a higher low, which comes here, but no setup, unfortunately. And we shoot back up here, and then you get a first entry and a second entry. And then you could also look at this as a double bottom. It's also, so you could say, hey, it's a failed second entry. Even though there's 2 legs back here, it doesn't break higher the way your failure would. So I don't know if that makes sense or not, but notice your double bottom. You come up here and you try to go short once, and then twice, but you don't have a break higher yet until here, so that's where the failure would be. That's a little advanced, a little harder to see. You need to be a little better chart reader probably to see that, but you could still see the second entry long. So maybe you take that trade. I marked it green, but I'm just not crazy about it. Of course, we turn down, and no failure or reversal set up here until way down here, and that's not anything you want to trade. And then you do get a break and new low, and then we're We're just kind of chopping sideways. There was a second entry short right here, but hopefully you can see that we had that little congestion and a failed break, and then we're just right back inside. Originally I had the channel, this range drawn right across there like that, and then the measured move was down here, and so I just drug it down. And to come to find out it's two-tiered. So, but it's tempting to trade that one. I'd wait on a lower high, and that doesn't come till here. And then you're right into the EMA, right in the midline, which you don't worry so much about in sideways action, but we're still making lower highs and lower lows here. So I'm just not crazy about that one. You do make another lower low here, but now you can see it's just kind of sideways congestion. It ends up working, but wait on something better, especially this late in the day. And then finally you get a triple test. Now you've tested that enough times. You got a bearish bar. That's where you want to go short. And it's an easy scalp, but you don't get much more. And that takes you into 230. So most of your best trades were earlier on in the day. But yeah, in the end, it just looks like a big range day again that closes almost on this low. So, and again, I think we're going lower yet. I don't think we've reached our downward target yet. If we don't reach it, then prices rally out of here, that tells you something else. But anyway, this is almost 30 minutes, so I'm going to wrap it up. These are not easy days unless you trade the trends. When you start chopping sideways, you need to really, especially when they're not real consistent. Every high is a little different here. The lows are a little more consistent, but every high here is at a different spot, and that makes it really hard to trade a range like that. So you have to wait till you get the trends, or you get short up here or long down here. That's pretty much how you have to do it. So there's a few more advanced trades in there that some traders might take, but if you're new to price action, you're just looking for longs here and shorts here, and that's going to end within the trend, your second entries and things like that, triple test and things like that. So anyway, I'm going to wrap it up. We'll be back again to do it tomorrow and wrap up our week. I'm done for today. This is Mac with PriceActionTradingSystem.com, and we'll see you next